All righty, traders. This is Blake. You are listening to the Face Show. I hope everybody's having a great wait. Today is Thursday. Having a great. Holy shit! We just had a solar eclipse day. Ryan, how was your solar eclipse experience yesterday?
Rubbish.
Did you say dovish?
Rubbish.
Rubbish, dovish, same thing. I thought you guys were going to have this like wonderful view of the solar eclipse. You guys in Europe, we're over here. Ironically, we only get like we have sun.
I don't know if it's me, but you seem to be breaking up a bit, Blake.
Oh,
Yeah, yeah. I assume everyone else is hearing that. He's bugging in and out.
in and out. Oh, it'd be
Yeah,
bugging in and out. Maybe Marcus said can't hear you.
yeah, you're dropping in and out. You do that sort of thing.
Really? All
Yeah,
right. Let
it's
me
okay now.
see. A little bit better here. Am
Yeah,
I better now?
yeah. It's like your internet was cutting out or something. Yeah,
That's weird. That's,
yeah.
that's strange. Okay, well, thank you. Well, we have a monsoon, and so that's what I was saying about ironically, we have sunlight like 300 days out of the year plus. And of course, I didn't get to see anything because we have clouds for once in forever, it seems like. So therefore, it was rubbish on my end too. So I wasn't expecting much, but I'm really bummed out. I'm really bummed out. You guys didn't get a good view. How about those of you that lived in Spain? That's where it was supposed to be awesome.
Yeah, that was good. They got, I think Northern Spain, they got 100% eclipse. I think it was because it was the sun was quite low in the sky here. You get a lot of haze, and you get, it has to cut through more atmosphere. The one in 1999, the last one was much better. It was sort of midday-ish, 1 o'clock-ish, and it was right up in the sky, and it got really cold, and you could see it clearly. But hey, only another 80 years to wait for the next one.
Yeah. Hey, Ryan, everybody says my sound is a little weird today. Is
Yeah,
it,
it's
do I?
gone. It's gone a little bit sort of fuzzy. Do you want me to take the
Yeah, I'm
host
gonna, I'm
and
gonna, I'm gonna jump out.
make me
And
host first?
yeah, you take it over, and then I'm gonna come back in and see what happens.
Okay, I'm not host yet. You have to give it to me. There we go. Okay, Blake's gone. Just me. Right. I hope my voice is okay. Otherwise, we're in deep doo doo. But yeah, just while Blake chimes in, yeah, we've got PCE. We've got PPI coming up at the bottom of the hour, so we'll keep an eye on that. No doubt we'll talk about that when Blake gets back in, but it's going to be a follow up to what we got yesterday from the CPI data. And again, Blake's going to be talking about all this, but just for the moment, we've obviously had that bit of a reversal in the dollar. It was looking a bit weak after the CPI data, but we couldn't push the envelope, and it's come back a bit today. But by and large, we're sitting bang in the middle of some of the recent ranges, particularly if you're looking at something like euro dollar. I'll give it a couple of moments, and then if Blake doesn't come back, I'll share my screen. Well, I might as well do it now quickly. Give me one moment, just in case he's having internet wobbles. So I wasn't set up for this, but I will be in 2 seconds. Give me a moment. Wallop. Right, he's not back yet. So let me share my screen. There we go.
Hey, Ryan, do I sound a little bit better now?
Yeah, much better. I've just this
Okay.
second taken the screen. So if you want to grab it back,
Yeah,
please
yeah,
do.
yeah. I'll grab it back as long as I sound better. And so all right, thank you for doing that. I'm not sure what is going on, but I fiddled around a little bit and it seems a little bit better. All right,
Yeah,
so
Zoom Gremlins happens to me sometimes on the flow show.
the gremlins. It's the gremlins. All right, so let's talk about a couple of things, Ryan, going into like today. First and foremost, you guys saw that I mentioned something about Cisco. Cisco is a really interesting stock to me. Because yesterday, when we went right after earnings, Cisco was up at new all-time highs. You can see how we were trading at new all-time highs yesterday. Like this is right after earnings. But, half an hour later, notice the slump, and now we got a big false breakout on Cisco. So this ended up squeezing out a lot of people. But if you look at I'm going to take you all the way back to, for those of you that don't remember, this is the dot-com bubble, and I was trading back here in the 90s. This is like my heyday. So I was like in my mid 20s, and I wrote up the dot-com bubble and wrote it down. It was a really great time to be in the markets. The volatility was crazy. But what we noticed is actually we completed an ABCD of this move just this year. And so if you look at that last major low that we had in April of this year to the high, that was not only the 161% extension of the dot-com sell-off, so this is the high in 2000 to the lows in 2003, I think it was 2002, excuse me. We hit the 161% extension, but also completed an ABCD equal leg move. So this is a big deal to me because I've been real hesitant ever since Cisco made that last push earlier this year. I've been real hesitant about chasing up the stock. But as AJ, and I'm gonna go to our general chat room really quick, and I want to go into a conversation that AJ was just saying. I'm like, Cisco earnings were good. They beat on both top and bottom. Forecasts also look good. Yeah, their forecasts look great. I mean, you look at Cisco, from an earnings point of view, they beat on every metric pretty much, and had a really great. And this is Earnings Hub, by the way, which is integrated into Trading Analytics. If you guys don't know that as well, I just have the upgraded account here, so I go over here to the site just to get the detailed reports. But you can see it, like I said, you can see it right here on Trading Analytics too, and get Cisco's the earnings that you see here right there. Oops, it keeps popping up below. But anyway, the fact is when stocks move lower on good news, that's a risk. And that has become a risk for Cisco now. And I think this is true for a lot of the tech sector, Ryan. The problem is that we're starting to see, it's not a, like, earnings season has been good. If you're taking a step back, over, I want to say around 80% of every company that's reporting earnings has reported good earnings, and they beat. But the price action isn't as good this quarter that we've seen in previous quarters. Previous quarters, you'd see, stock beat earnings. The stock is up another 10% post earnings. And that, I'm not to say that's not happening across the board, but we're seeing more often this quarter that, how should I say, you're getting more of the, it's already priced in price action, which is another way of saying buy the rumor, sell the news. Or another way of saying it is stocks are not going up on good news, not universally. And that is something that we need to pay a very, very close attention to going into the third quarter of 2026. I'm not saying you should be shorting equities right now. I'm telling you that the price action following earnings this quarter is much different than what we've seen for the last year. And that is because there's a growing negativity about the AI build out and what future expectations can be. The AI trade is not over, I don't think, but we're starting to see signs of, oh shit, is this another .com situation? And I know we can run parallels because I saw the parallels when you think about like all of this. The trillions of dollars that are being put forth, that's being borrowed, by the way. that's being put forth in the AI build out reminds me a lot of the dot-com boom. It's very similar. There is still cables that have been laid across the Atlantic Ocean that haven't been used during the dot-com build out. And I'm not saying that this is the exact same, but there's a lot of similarities. And so we need to be a little bit more conscious of that. And like I said, I'm not here to say, just short everything, but I'm here to say we have to really be careful. And I'm very respectful of what we're seeing here. Look, we are still in a bullish pennant. I'm not going to sit here and be bearish when we have price action that looks like this, Ryan. That is a very bullish setup. We have a bullish breakout on the S&P. We're consolidating gains. That's a bullish pennant that actually still points above 8,000. I'm very respectful of what I see here, but I'm also very respectful of price action. And what we've seen in Cisco is a great example of that. So, and that's something we need to be thinking about as we go into, we come into, the end of August. We're starting the second half of the year, and we're getting into third quarter, and we're going to start seeing how stocks respond when all the traders are back. But it is something that we need to be really, really careful of, in my opinion. And I'm sounding the alarm because this earnings season is a little different than what we've seen. Ryan, before I start moving into what we're seeing in the rest of the market, any thoughts on what I just said?
Yeah, you're exactly right. I don't think we're heading for any sort of crash or anything like that. But we're definitely seeing we're definitely seeing market hitting rallies. So what you probably had with Cisco is that you had a lot of people waiting in the wings to jump on a big rally. We didn't get it, so they hit it where it was. It hasn't sunk it down to year lows or anything like that. You just got the sellers coming in saying, right, well, it hasn't rallied. I wanted to sell on a rally, and we're going to come down. So that, right. I think that's it. You have to, sometimes you have to know what the market bias is. It's the same for dollar yen. Dollar yen's a dip buy since the intervention. It's been that way, and then
when have we ever had intervention and dollar yen has not been a dip buy? By the way,
exactly. So I mean, that's perhaps an outlier case, but you get my drift. Markets tend to move different ways, and it's dangerous for traders not to identify when the bias changed from a dip buy to a rally sell, because when something, for example, is a dip buy for a prolonged period, you get into that mode. Right, I'm going to buy every dip. I'm going to buy every dip. I'm going to buy every dip. And when it changes, people keep buying the dip, and then it's not working. And then they've gone 4 or 5 trades where it hasn't worked. Instead of stopping and going, well, it didn't work after 3 times. Has something changed? So it's very important that traders look for how markets react and when those biases change, because then it tells you what the path of least resistance is when you're trading.
Yeah, and that's one of those things that I think we just have to be very respectful of what we're seeing price action wise. Whether you're talking about dollar yen or whether you're talking about Cisco or you're talking about equities. Look, I'm a big advocate of, hey, buy these breakouts, the continuation patterns, what we're seeing in the S&P, everything still looks very constructive. But when stocks stop going up on good news, that's when we need to be more cautious. Right now, stocks are just going up because they're going up, and then it doesn't really matter. And so we still have to respect that. And that brings us to CPI. One of the things, Ryan, that happened yesterday is we saw a little bit of profit taking after an inline CPI print. Now, when I look at the S&P and I go, okay, well, a little profit taking, S&P we hit actually our pennant resistance, pulled back a little bit, but then we just grinded back up. You look at the dollar very much respecting its range. We've been talking about this big range for, like, I've had this box drawn for I want to say about a week and a half now, and today, and I even last night, even yesterday, and by the way, I'm going to come back to central bank interest rate pricing, which we need to discuss a little bit. But if you go to the bias chart and you look here, like literally, though everybody that's in our community knows this. When you look at the dollar index, I've been writing 100.05. I want to say I've written that out for resistance for the last week and a half, maybe something like that, right? And yesterday or last night, we went to 100.08. So basically, it held. I mean, within three pips, it's holding. The fact of the matter is, I think people came in yesterday with the idea that CPI was going to be a little weaker, came in line. You had people leaning into the dollar. It bounced. I'm not saying that the dollar can't rally from here. It obviously can, especially if we see some stronger data today from the PPI. But if the data comes in weak, now you got all the shorts got squeezed out yesterday. That the dollar index could be back at support, if not through. I don't want to say we're ready to break, but the fact that the dollar index is just holding barely, like on by its fingertips right now onto that channel support. We got to be real careful with the dollar, especially now that all the dollar shorts got squeezed out yesterday. So what do you think about the dollar and the price action following the CPI going into today's data, Ryan?
I think it went exactly as it should have done to a point. I mean, we talked about it yesterday. I spoke about it on a flow show. Watch those damn US yields over the CPI data. Now, FX saw the softer numbers and it decided to go for a little walk. And we saw the dollar softening. We saw euro rallying, cable broke up through 135.20s. But bonds just went, meh, we're not bothered. And so what happens that is you don't get a tailwind from yields in FX. So FX went for a wander and then got as far as it went and then thought, right, that's enough. Euro dollar, we couldn't even get to that bloody 70 level. I mean,
Right.
that just shows you. And then what happened? We turned tail. Everyone went, all right, well, no one's selling the dollar. So anyone who was short said, right, I'm getting out of Dodge. And we dropped all the way back to 115.11 this morning. So, yeah, it wasn't enough. That CPI wasn't enough to get the bond market moving. It was enough to push rate expectations down a bit. But for everything else, it wasn't big enough to say, right, we need to sell the dollar hand over fist here.
Yeah, speaking of which, let's talk about central bank, interest rate expectations. What we've seen, and this, you guys can get this in Trading Analytics. Remember, this is like it's $1 a day, and then you can be in the chat room with Ryan and myself and having conversations with us about Cisco and the price action in Cisco, and having conversations about all of this stuff that we talk about. If any questions that you have for me, you can actually ask here. Same with Ryan. K-Man's in here, although he's been gone last 2 weeks. He'll be back here next week. But we talk about all of these concepts. And one of the things that you'll get here is this interest rate pricing tool. And what you've seen over the last couple of weeks, Ryan, and I find this rather interesting, is we've seen interest rate expectations really drop following, the CPI yesterday, obviously, and then also the jobs report as well. We've seen interest rate expectations come down a little bit over the last couple of weeks. Does that mean that the Fed can't raise rates, or could this turn back higher? If we see producer prices come in, strong.
Absolutely. If we see PPI coming in, maybe even unchanged or moving up higher than last month, yeah, you're going to get that white line probably crossing over the blue line, and the market will say, "Oh, right, well, CPI came down a small pip, but PPI has shot up, so that's going to feed through to next month's CPI, and it's going to feed through to PCE data." And we've been talking about trends. One bad jobs report isn't a trend. One softer CPI report isn't a trend. But in a market trading day to day today, that's now a soft jobs report, a soft inflation report. If we get another soft inflation report today, that's 3. If we get soft retail sales, that's 4 soft data points in a week. And that's when the market goes, well, hang on a minute, something might be changing. At least the short termers will be trading that. So we'll probably get another little sell-off on soft numbers. If it's really soft, You know, we may do similar to what we saw yesterday. Maybe the bond market and yields will start reflecting that a bit more, or maybe they won't, and we'll have the same price action we did yesterday. But if it goes the other way, we get strong PPI, we get strong retail sales, everyone's going to be back on the hype bus again.
You know, it's interesting, Ryan. Yesterday, Addy, who lives in Canada, and he's in our chat room, and I've actually done some one-on-one coaching with him over the last, you know, over. I want to say it was like at the end of last year, maybe it was the beginning of this year. Anyway, Addy, if you're listening in, how you doing? Hopefully you're having a great day today. He asked me a little bit about the Aussie Kiwi, and he's like, he was like, well, you know, we're seeing this, you know, move in the Aussie Kiwi, and we've seen this really nice bounce over the course of the last couple of weeks. He's like, why is the Kiwi dollar so weak? And I'm like, you know, it's not really the data. I think it's like interest rate expectations have shifted a little bit, and you're seeing, you know, that shift, and you can actually see it here where you have the RBA is more hawkish, and then the, you know, RBNZ is more neutral. That in itself can lean into a currency. So if you guys trade currencies, this is like a really valuable tool to have at your disposal with trading analytics. Like I said, it's only $1 a day. It's like Bloomberg quality stuff, and you get so much more. I'm just saying that's one of those many tools that you get with trading analytics. But you can see here's how the Aussie Kiwi has really responded over the course of last week. We've seen Australian, you know, really move higher, and then, you know, as of last night, as a matter of fact, there was some New Zealand RBNZ inflation expectations dropping last night too. But as soon as that came out, finally, it's like, okay, we're done. We finally, this is one of those things where you talk about expectations versus reality. And this is where the market finally said, all right, that was probably it. And we can pull the plug on that. Ryan, we're just a couple minutes outside of the data. I do want to take a look at what, you know, we obviously know where the S&P breakpoints are at. We're pretty much there. I mean, you know, you look at the S&P, we're up against pennant resistance. If this data comes in weak, I do expect yields to come down. I expect, because this is from a producer point of view, I expect rates to come down. I expect the stock market to actually blast higher. It's really interesting, though, even with yesterday's inline data, you didn't see the stock market even flinch. I thought maybe since rate expectations have come down just slightly, we would have seen a little bit of we would have seen, you know, maybe the stock market move more, but we haven't seen it move at all. I wonder if today's data is gonna dislodge us. What do you think here?
Well, I'm going to look for the same reaction. You know, I thought there was a risk CPI could have gone up yesterday, but, you know, like me and Stell both had opinions. He thought it was going down. You can have an opinion, but it's what you trade that matters. And as soon as I saw Spoos dipping on that inflation number, I jumped in, and people in our chat room jumped in on gold. I mean, that dropped to 43.86 and then rallied all the way up to the 44s, into the 44s. So
right,
yeah, if you see if I see that type of price action again, like a dip or lower PPI, I'm probably going to add to my stock position, S&P position, and try the same as what happened yesterday. But yeah, it's whether it can move yields. I mean, CPI is obviously the bigger number. Whether PPI can move yields as much, I think depends on the variation. It will need a big old move. I'm talking like a 100 basis points, 100 percentage point move to get things going.
Yeah. Speaking of which, I want to show everybody what's happened with gold and silver. I think these are really great examples of what happens to an asset when you have this rally, and you have you have divergent relative strength, right? And then you see us, you know, rally. Finally, the rally pauses. All we're doing is getting a consolidation in gold, but look at relative strength. Relative strength has actually worked off to neutral. So now we've had a really bullish move, consolidation, relative strength is back at neutral. Now, if gold decides it wants to rally again, because, you know, as Ryan's talking, you know, yields start to rally, or excuse me, yields drop, You know, maybe the data comes in a little weaker. Excuse me. Then we start to see another surge higher in gold. This is how we build on an already bullish trend. And this is how RSI, you know, resets itself. And I think it's a great example when you're looking at silver, did the same thing. Nice rally, divergent, told us we were at least going to pause. We paused. Now that we've consolidated, RSI is back to neutral. These are ready to move again, back to the upside if the data supports it, if the move supports it. So we would in today's data here, you know, with PPI, and we also have retail sales tomorrow. Don't forget that. If the data comes in a little weaker, yields are going to come down. It's going to give another surge for these precious metals to make another move higher. But like yesterday, maybe we have inline data. Maybe it comes in a little hotter, and it allows these to reset a little bit more. Like if you can see, you know, silver is a great example. If you can see it back at 63 bucks, I think this is going to be a level that you want to be a buyer if you can get it. Like if you can get a move down here in silver today, I think that's going to be a really good trade. By the way, if you guys didn't catch this on copper, we did have the head and shoulder pattern. Like I said on the week ahead video, you wanted to sell at 673. We actually hit that neckline, reversed, completed the head and shoulder pattern today. Overnight. So now that that's done, I mean, copper looks like it could resume its uptrend too, because we actually are holding outside of the triangle once again. So that's been a decent mover. Crude oil is really off my radar. Ryan, before I go into and grab all the appropriate data, what other trades are you looking for going into today? Because I'll tell you guys what I'm looking at here in a second.
Well, I jumped on the dollar knock. I couldn't resist it in the end. You know, it's you talking about head and shoulders. There's a potential inverse happening there, but I like to trade the shoulder because it hit that 61.8 fib again.
Yeah, it did. Wait, so you're okay. So it hit the 618 retracement. We're in this descending channel. So what are you doing with the US dollar Norwegian krona right now?
I'm long.
So okay, again, so
if you zoom it out a bit, take a couple of months in.
Okay, so you picked it up here. It's held the 618. You might actually have a double bottom. And so on good data, strong data, the dollar note could break out back to the upside here, and then you'd have this nice double bottom.
Yeah, but as I say, if you zoom out that chart a bit, you'll see the bigger pattern at play, because we hit that 618 earlier in the year.
Yeah, so you're looking at a long-term inverted head and shoulder pattern, like do type of thing.
Yeah, but those shoulders are identical. I like it when it's symmetrical. That's a pattern I just look for. You get a low, you hit a fresh low, then you respect the prior low. So I look for that for taking a trade off. And yeah, I had to chase it a bit because I didn't get in right on the level. So I'm in at 90.50 and a bit. And well, it's doing all right at the moment.
So you're leaning into dollar strength now. Are you playing only dollar strength? How about if the dollar weakens? What are you looking to do?
No, I'm still fairly bullish the dollar because I don't see the economy doing anything massively wrong at the moment. So I'm still long dollar mex. That was interesting as well. That held the 17 level, got back above the 1705 level, and that 1705 level goes back decades, but we can't break up through the recent support points at 09 and 15. So it's still in the balance, that one, but I'm happy to stay long while 17 holds.
God, I see that as a bearish breakdown. I'm short dollar mex. This is where Ryan and I are on opposite sides of the trade, which I am short dollar mex right now from yesterday. But look, we've been on a lot of times we're on the same side of the market. Sometimes we're on opposite sides. This happens to be an opposite side of the market. See, I look at it as, you know, if we continue this breakdown, we have this bearish wedge. I'm looking at 1680, and I'm just playing it while it's below 1710. My stops are pretty tight. So hey, you know, it takes two to tango, and it takes sometimes two different opinions to make a market, right, Ryan?
Yeah, exactly that. And if it does break 17, I might go with it as well. So I might flip short. Right, here's the data.
Here we go.
We are softer than expected. Course is as expected 4.2. The headline has come in at 4.7. So it is softer than expected on the headline.
Yeah, look at that. That is below expectations. So the dollar is a little weaker. following the data, but
It's not
not a whole
massively
lot.
lower, you know.
Yeah. You know what's interesting about that, Ryan, is the initial reaction was gold was higher, which I don't have here. I'm looking at obviously yields. We have the dollar that came down and then has bounced back. Yields spiked down, they came back. Stocks went up and then they came back down a little bit, but we're just not seeing a big reaction here, and I wonder why. Is there anything in the data that you're seeing that that is leaning you one direction or the other right now?
No, I mean, I think in comparable terms, because PPI is a more volatile number, those sort of numbers are effectively what we saw yesterday in CPI. If PPI dropped to 4% or 3.5%, you know, that's like moving 3, 4, 5 pips in CPI. So
Yeah.
it's all in context. But yeah, I'm keeping an eye on yields, which are not doing an awful lot again. And once more, if they don't move, you shouldn't expect much in FX.
All right. Well, I mean, we're definitely not doing a whole lot in FX, and I'm not like super excited about what I'm seeing at this moment. So I'm just kind of standing aside at the moment, and I'm surprised that gold didn't get a bigger push from there. Gold, and by the way, the weekly unemployment claims, I know they have barely moved off 200,000, but they are up above 200,000 and a little worse than expectations. Not
But
something that is jumping out at
continue,
me, but
yeah, continued claims are now down under 1.8 million. So that's good.
mm, yeah, interesting. Sorry, I was gonna just pull up gold really quick. So yeah, we saw a little wiggle in gold. Let me get into a little spike up and right back down again.
That's another interesting one because we got, funny enough, it was trying to make a break yesterday above 44 and then 44.17, and it failed, and then we've got the drop down. But then gold overnight, we had another bout of Asian buying, which actually saw us make that high, and then that crapped out. So again, that's telling people who are trying to buy the dips in gold to be careful, because we can bounce, but we can't get and hold above the key level around that 4,400 mark. And if we can't do that, you shouldn't be expecting it to go much higher again.
Yeah. And it looks like just, the market's just kind of brushing off everything, which is a bummer. I was really hoping we get something that would, dislodge us, out of this, triangle in the S&P. And unfortunately, all we're doing is we're just sitting, we just basically tested the upper end of the S&P, this pennant. Maybe it will break today. I wish just like looking ahead and looking at any earnings, I don't see anything that's going to move us there. Let's go back to yields pop back up again. You can see they're well, I guess they're kind of all over the map. They're not really doing anything. The dollar index bounced a little again. Nothing exciting. Gosh dang it, Ryan. Are we going to have to wait for retail sales tomorrow to get us out of this malaise? I hope
It's
not.
the most important retail sales number in the universe.
Ever that's ever
Never.
plagued this planet. It's going to be the best retail sales. So that means everybody listening in, you've got to be here tomorrow live with Ryan on the retail sale. I won't be here because I'll be on Ninja as I normally am on Fridays. But you have to be back here with Ryan tomorrow, and Stelios. He's going to be here as well. So you
Ooh.
can't miss tomorrow's show, right, Ryan?
Yeah, that'd be cool.
Yeah. All right. Cool. Well, guys, I want to say thanks for being here. Ryan, do you have anything else? Yeah, no, we did talk about rate expectation. Do you have anything else that you want to say before we go? Any other markets that really jumped out at you? I'm just excited. I just want to get past August. And once we get through to Labor Day, it gets super exciting in the markets. But I'm just hoping we get something good happening right now. Anything else that you're looking at?
No, not really. Like you say, it's just trying to pick a trade out of this volatility without doing something stupid and getting stuck in something that doesn't move for 20 hours. So yeah, all I say is if you've got levels, be patient. Just wait for them. Don't start trading ahead of them, because then
I have this I have this post-it note that's sitting on my desk, Ryan, that says target trade. And whenever I say target trade, that means pick your levels. To me, it means pick your levels, trade your levels, have a plan, trade your plan. Try not to have any FOMO. That's really important in the summertime markets. It really is. So great.
Yeah,
Great.
I've got a post-it note. It says milk, eggs, bread. Oh, sorry, that's a shopping list.
That was a wrong post-it note, buddy. Hey, I just want to urge everybody, if you don't have trading analytics, make sure you take your free version, because you see what happens here. I want to show you. I'm going to take you back over to trading analytics. You see these levels. By the way, some of these need to be they get adjusted by the team here, and you see these support and resistance levels. As you trip support and resistance levels, you actually get, if you have the mobile app, you get notifications. And the reason why that's important, because you might go, well, why is that level important? That's not the reason. The reason why you have these levels, which, by the way, they are found by us in the team manually. I put them in. Steve does a lot of them. Anyway, whenever those levels get tripped, what is it telling you? It tells you that the market's moving. So if you know the market's moving, that also suggests you should be looking at your phone, maybe looking at prices, looking at some of your positions. So use trading analytics as a tool that helps. It's like an alarm system for the markets for you. So make sure you sign up for your free account, or sign up for your premium account and come chat with Ryan and I throughout the course of the day. Sounds like a great idea, right, Ryan?
Yeah, we love talking.
All right, guys. Have a great day. Good luck. We'll see you on the Lunch Money Show in a little bit. And then for those of you that are in the community, we'll see you on the Morning Edge in about just over 30 minutes. You guys have a great day, and we'll catch you tomorrow for the retail sales. Bye-bye. See you, Ryan.
Ta-da.
Happy Solar Eclipse Day.
Boom.
Solar Eclipse post day. All right.